My name is Gerald. I'm the founder of Beansprout. Thanks so much for joining tonight's webinar. The topic that we are going to talk about is on a company that recently listed on the SGX. It may not be a name that many of us are familiar with. For those of you who have invested in, say, Singapore banks, Singapore REITs, or even some of the Singapore mid-cap names, you may not have heard much about this company. But what we want to do in tonight's webinar is to understand a bit more about this company, what they do, so that we can have a more informed view around this company. Is Avepoint. You probably have read about it in the newspapers or seen some of the news around the first dual listing between SGX as well as the Nasdaq. But I think for many of us, we may not be familiar with this company. So what we want to do is to find out more about what they do. Okay, just a quick introduction about Beansprout. We provide you with financial insights to make better financial decisions. We write regularly about Singapore stocks, bonds, REITs, and ETFs. And you can find this content on our website, growbeansprout.com, as well as our various social media channels. Before we start, just a disclaimer that tonight's sharing is not tailored to your individual investment objectives as well as risk appetite, and hence should not be taken as financial advice. Okay, so quite a number of things that we want to be going through today. First and foremost, I'll give an introduction about Avepoint. For me, I always believe in looking at broader industry trends before I dive deeper into the company's fundamentals. So we would take a look at the industry that Avepoint operates in to understand some of the growth trends in the market. Next, as investors, we want to make sure that the company is able to make money so that they can enjoy healthy returns. They can generate a good return for investors. So we'll find out how does Avepoint make money. Next, we'll look at some of the recent company performance to look at it from a fundamental perspective and understand how the company has been faring. And last but not least, all investments come with risk. We'll take and look at some of the key risks that comes through in investing in Avepoint. Okay, so I'll start with an introduction about Avepoint. Since for many of us, we may actually not have heard about this company prior to news of its listing. So I think what caught my attention was this headline that came out in the Straits Times just about a month ago. Which actually introduced Avepoint as a US cybersecurity firm, which actually had its share debut on the SGX. When I look further in the headlines, what I saw is that this is the first B2B SaaS company to be listed on the SGX. But even then, still quite a number of technical terms to understand in terms of what do we mean by B2B, or in other words, it operates within the business-to-business space. And then what does it actually mean by SaaS or software as a service? Okay, so I think while it has actually occupied the headlines as the first B2B SaaS company to be listed on the SGX, I still had to do some work to understand actually what the company does. So having done the research, that is what I'll be sharing with you today. And hopefully we can have a fruitful discussion around what the company does, given that it is a company that we have not previously heard much of and may not know much about the industry in which it operates. Okay, so I think the first point that stood out to me when I was doing my research is really how it is tied to some of the names that we are familiar with. So even if we may not have heard of Avepoint in the past, I think what caught my attention when I was looking up more about the company is that there is often linkage to the company Microsoft. And I think that was really what made me interested in finding out more about what do they exactly do for clients that might be using the Microsoft software suite. Okay, so apart from Microsoft, I also see that there is some linkage with other companies that we might be familiar with, such as Google, AWS, Salesforce. But I think the name that it is predominantly tied with is actually Microsoft. Okay, so I think that is what I then dive deeper into to understand what do they actually do within the Microsoft ecosystem. Okay, so that is where the definition around data security, data protection, and data governance actually comes in. I see these three terms being used very often in terms of the company description. And I think that goes back to its key software offering, which is actually called the Confidence Platform. So I think for us, we may not be so familiar with what the Confidence Platform actually does. For many of us, we may know what Google is, what Netflix is, what Spotify is. But then for myself, I have actually not heard of the Confidence Platform in the past. Okay, so maybe I will do a quick poll. If you have heard of Confidence Platform in the past, you can put a yes in the chat. And if you have not heard of it, you can put a no or N in the chat. Okay, so that we know what is everyone's familiarity with this platform. Okay, so I think if you are like me and have not heard of the Confidence Platform in the past, I think this is where an understanding around what it does might actually be helpful. And I think it comes down to three key things, which is really around the ability to provide users with the ability to enhance the data security, enhance data protection, as well as data governance. So I think as consumers, those three things are not things that we think about very actively, or it may not actually be top of our mind when we are using the internet, sharing files with our friends and family. But I think particularly in a workplace setting, that is where data security, data protection, and data governance become more important. And that is really the background behind how it is a B2B offering, because effectively the key clients would be corporates that would make use of this software to be able to enhance their data security, enhance their data protection, as well as enhance their data governance. Okay, so what do we actually mean by data security and protection? What is the key here is that it allows the companies to better comply with regulations, to be able to preserve critical records, and to ensure business continuity. Okay, so just to give you an example, I run Beansprout. So I would consider myself a business in that case, in which whatever I do have to comply with the regulations around how the data is actually protected, how it is secure, how I'm able to preserve the records, and how I can ensure that I am able to keep the business running even if there are data leakages or other issues. Okay, so that is really where the Resilience Suite actually comes in to help businesses like myself think about how we can better enhance our data security and protection. So maybe just to give another example, we are in an era where AI is increasingly being used. I think when we use tools like ChatGPT, we may not think as much when we actually attach files with it, put in some of our queries that may include our personal information. But definitely in a business setting, that becomes more important because you don't want confidential data to actually be uploaded to ChatGPT, because we don't really know what the data can potentially be used for. So I think that is once again how data security and protection becomes more top of the mind in the business setting. Next, we come to data governance, which is really how this comes together as a framework so that businesses can think more actively around how the employees can use the software in a more controlled environment. Okay, so the whole idea is to be able to reduce security risk because we don't really want any reputational risk to come through when data is being lost or inadvertently being leaked. Okay, so that in a nutshell is what the Avepoint confidence platform is used for. Okay, so how I would think about Avepoint and its competitive positioning is that it is a one-stop platform. So I think when I think about data protection, data security, and data governance, some companies might choose to be focusing on one particular aspect. So some companies may focus just on data protection, while some other companies may focus more on data security. But what the Avepoint software actually aims to do is to provide this one-stop platform. And they believe that in doing so, they are able to better serve the customers and being able to keep the customers sticky on the platform. In terms of the benefits to the customers, being able to do the protection, security, and governance on one platform potentially helps to streamline the workflow, provides more data insights, as well as potentially cost savings rather than having this being run on 3 different platforms. Okay, so that in a nutshell is what Avepoint actually does. I know it is something that we may not actually deal with on a day-to-day basis compared to, say, Netflix or Spotify. So maybe just to understand whether my pace is okay at this point in time, if it's okay, you can put a yes in the chat so that I know that this pace is okay. Or if you would like me to be slower or faster in terms of my explanation, do feel free to put in the chat as well. Okay, so I'll just take a quick pause to see whether there are any comments that you all have left before I continue. Okay, I see mostly yes. So with that, I will continue with the sharing. Okay, next we'll take a look at industry trends. So I mentioned earlier that for me as a fundamental analyst, what I want to do is understand the opportunities in the industry. I think increasingly that is becoming important because if you are actually an industry that is fast growing, say for example in electric vehicle, if it is in AI, that tends to bring more opportunities for the company. But on the other hand, if you are in an industry which is on the decline, then that may potentially present more challenges for companies within the sector. So next, I'll take a look at the industry trends in which Avepoint actually operates in to understand the opportunities that come through. Okay, so in terms of the opportunity set for Avepoint, we can actually think about it in terms of different opportunity sets. So I mentioned earlier, it is in the business of data protection, data security, data governance. So I think the most immediate opportunity set really comes through from being able to enhance the governance, improve on the compliance, and that is potentially a 6.7 billion global opportunity. Next, we have data replication and protection that effectively ensures that the data is well protected. So that is potentially a 12.3 billion opportunity. Next is data integration and intelligence, which is then taking one level up to think about how data can actually help to enhance various businesses. So that can potentially bring about another 10.1 billion opportunity. And last but not least, the larger opportunity set really comes through from how this is being used in terms of the analytics, how when companies actually move to cloud, that can help to protect the applications, and that is potentially a 52 billion opportunity. So in 2024, if we were to add all of this up, the total industry size globally is at 81 billion. And based on industry forecast, that is expected to grow to about 140 billion, representing a compounded annual growth rate of about 15% per year. Okay, so I think at the headline level, there seems to be sufficient growth opportunities in this industry, really because of the fact that more companies are moving towards cloud, more companies are using software, there's increasing focus towards how data is being protected, and that is creating the opportunities within this industry. Okay, so how do this actually change with what we have seen in terms of the AI growth over the past year as well as going forward? Okay, so I think the talk in the last 1 year has been really the growth of generative AI, how that actually has enabled different applications. And I think this is where the need for data protection, data security, and data governance becomes even more significant, because effectively that would require increased cybersecurity. You do not want the data that you are uploading to be compromised. You do not want this to be hacked. So the cybersecurity becomes increasingly important. Next, we have the control of the IT environment. So whether your employees are doing this in a safe and secure way, whether they might actually be using unsecured network, I think those are things that companies would then need to consider. And last but not least, as we encourage employees to embrace AI in terms of their work, we have seen our PM actually talking about this in the recent National Day rally. So as we try to modernize the workflow, get more employees to be embracing AI, then I think that is where the need for data protection, data security, and data governance becomes even more significant. Okay, so I think that is the background towards the growth in the industry. Because once we are thinking about things like generative AI, you and me actually using ChatGPT or other AI applications, then what we have is actually a lot of human-generated data on top of machine-generated data. So what are some examples of human-generated data? That can be, for example, this webinar that I'm doing. After this 1 hour of webinar, I would actually have a video recording. So that is a human-generated data. And what are the different users of it? We can upload this on YouTube for you to be able to watch a replay. We can create a transcript for it using Gen AI. So that effectively is the kind of human-generated data that is being created at this point in time. Okay, apart from this webinar, we also have other things such as email. Say, for example, you subscribe to an email newsletter that provides you with investment insights, or even things like your chats, say your WhatsApp interaction with your family and friends. Those are all considered human-generated data. Okay, then on top of that, we actually have the machine-generated data. So things like how some of this data is then being processed, whether is it being fed through to Excel spreadsheets, whether is it being fed through to client portfolios, those that can then potentially be machine-generated data. So what we see here is that we are actually in a world where a lot of data is being generated. And with that, we need to make sure that the data is accurate, it is well protected, and it is actually secure. Okay. So one example is, for example, if I am doing this webinar and I'm doing a transcript for it, I want to make sure that first and foremost, the transcript is accurate. Okay. Then next, if I'm actually going to share this via email with all the participants who have joined us on the webinar today, I want to make sure that your email addresses are protected and that it's not going to be compromised through a hack. Okay, so with all of this data that's being generated, that goes once again back to what I shared earlier around the importance of data security as well as data governance. Okay, I know these are not things that we think about very actively on a day-to-day basis, whether we are going for our meals or whether we are meeting our family and friends. But for a lot of businesses, this is something that is increasingly important because the last thing that you want to do is to wake up tomorrow as a CEO of a company and then realize that your customer data has actually been compromised. Okay, so that is what we see in terms of one of the surveys that was recently completed. This is done by one of the consulting firms, and the question asked is actually what are the risks in terms of AI adoption. So we can see here in terms of two of the key risks that were cited by the management. One is inaccuracy, okay, because you do not want the output of what is being generated by some of your AI applications to be what is not intended because it is inaccurate. Okay, then the next one is really around cybersecurity. You want to make sure that it is something that is safe and secure, and this use of the AI does not compromise on that. Okay, so we can see that it is clearly top of the mind for quite a number of company management teams. Okay, so that is really the industry trend that we see currently, industry that is expected to grow over the next 5 years, especially with the increasing usage of generative AI, increasing generation of data, whether it's a human generated or machine generated. All of it is creating more data, which then increases the need for data security as well as data governance. Okay, so that is the industry trend. I think then what we will look at is how does Avepoint actually make money. Okay, so I earlier mentioned the term B2B SaaS. So I've introduced what B2B actually means. So it's business to business as opposed to a business to consumer business, which most of us are actually familiar with. So for B2B, effectively, they serve more corporates rather than consumers. The next term that we come across is SaaS or software as a service. And that is another new jargon that some of us may not be familiar with. So I did a webinar previously introducing software as a service. If you have missed the webinar, you can find the webinar on YouTube on Beansprout's YouTube channel. But what I will do in today's webinar is just to do a quick recap around what is software as a service so that we can then go into how Avepoint actually makes money. Okay, so to simply put, in the past, when we are buying, say, Microsoft Word or Microsoft Excel, for those of you who are my age or older, you would probably be familiar with the concept of, say, a CD-ROM, where effectively we would buy this CD-ROM, install it on our computer, and we would actually have the license to use Microsoft Word or Microsoft Excel for our schoolwork, for our office needs during the license period. But as you probably realize now, you cannot find a store, or you find it very hard to find a store that sells CD-ROMs because all of it has moved towards a subscription plan. Okay, so for myself, when I want to use Microsoft Word, I just have to go to the website, I sign up for a 1-year subscription, and then I'll be able to unlock the license to use Microsoft Word on my laptop. Okay, so effectively that is software as a service, where for an annual fee, I'm able to use the Microsoft Office software. Okay, so effectively from selling you the CD-ROM, which is a one-time sale, it has moved towards a subscription plan, whether you pay it on a monthly basis, whether you pay on an annual basis. That is something that the business model has actually evolved towards software as a service. Okay, so I mentioned earlier that is effectively the kind of model that we have moved into. Effectively, the fees are charged on a monthly or annually basis over the subscription term. The application may be hosted in cloud, where you are then able to download when you want to be using this software. Okay, so effectively, there's no upfront cost. You have to pay a recurring fee to access the software. And what the provider will offer you is the updates, maintenance, as well as the security using the Microsoft 365 suite as an example. Okay, so what we have seen is that apart from Microsoft, quite a number of different companies have moved towards the software as a service-based business model. So some other examples would be Adobe, for those of you who use Adobe PDF, as well as those if you are in a company that uses various client relationship management services, then you might be familiar with some of this software such as SAP or other software services. Okay, so all of them have moved towards software as a service because that is the model that most of these software companies are now operating in. Okay, so we can see here a list of some of the largest SaaS companies globally. I mentioned earlier Microsoft, Adobe, but then I have another example, which is the Zoom webinar that we are now locked into. Effectively, as Beansprout, we have an annual subscription to Zoom, which allows us to be hosting this webinar tonight. Okay, so that is the model that a lot of these software companies have moved into. And likewise, that is how Avepoint actually makes money by offering their software through this software as a service business model. Okay, so why do companies want to move towards the SaaS model? Here are some of the key advantages. It provides a stable and predictable revenue because if you are subscribing to this on a monthly or annual basis, they'll be able to forecast how much revenue they are able to get from these recurring subscriptions. This is opposed to, say, selling a CD-ROM where they may not actually know how many people are going to be buying the CD-ROM from Sim Lim Square in December 2025. Okay, so that helps with the revenue visibility of the company. Effectively, that allows them to get more stable and predictable revenue. When they are able to do so, they are then seen to be more valuable compared to companies that provide one-time sales. It allows them more opportunities to upsell. So for example, when I am subscribing to Zoom on my basic package, I cannot host a webinar for more than say X number of people. But because we have 30 people attending our webinar tonight, so to be able to host this webinar, I have to pay for an upgraded plan so that we are able to enjoy the different features such as the Q&A feature. Okay, and because I'm subscribing to Zoom, they are able to understand my profile. What do I use it for? Do I use it on a daily basis, on a monthly basis? And using this understanding of me as a customer to better improve their products and services. Okay, so that is why companies want to be moving towards the SaaS model due to these various opportunities that are being unlocked. Okay, so at this point in time, I will do a short quiz. What are the advantages of the SaaS model? Okay, one, stable and predictable revenue. Two, more sales opportunities. Three, better understanding of customers. And four, all of the above. Okay, so put in the chat what do you think are the advantages of the SaaS model? Okay, so that is something that I've just gone through. The answer is all of the above. Companies want to be moving towards the SaaS model because it provides more stable and predictable revenue, more sales opportunities, as well as better understanding of the customers. Okay, so with that, we have actually seen the SaaS market growing significantly as more companies embrace the SaaS model, as more consumers as well as companies embrace the SaaS model as well. Okay, so between 2023 and 2024, we saw the global SaaS market actually growing from 330 billion to 399 billion. So that represents close to a 20% year-on-year growth. Okay, and looking forward, that is projected to grow annually by about 12% through 2030. Okay, next we look further at the APAC SaaS market. Likewise, we saw the growth of above 20% in 2024, and that is also further expected to grow by about 15% through 2030. Okay, so I think what we have seen here is that more companies and consumers are embracing SaaS as a model, and that is helping to drive the growth in this business model. Okay, so amongst the SaaS categories, there are different ways that companies can operate within the SaaS model. So, for example, some companies can provide AI-powered solutions. Some can offer data analytics solution, some can provide collaboration and productivity tools, and some can provide marketing automation tools. Okay, so for example, in this case, Zoom is considered a collaboration and productivity tool because by using this Zoom, we are able to collaborate in our understanding of Avepoint as well as the SaaS industry. And that effectively enhance our productivity as investors. Okay, so that's how I think about the various categories. And across these categories, the AI-powered SaaS solution is expected to be the fastest growing category. Okay, so we see this that the applied AI companies is growing at a faster pace compared to the other companies within the SaaS sector. And a big part of it is really driven by what I shared earlier around the increasing use of AI and the increasing embrace of AI both by consumers as well as by corporates. Okay, so together with that, we have also seen the need for greater security, and that goes back to what I shared earlier around the increasing demand for some of the data governance as well as security applications. Okay, so which SaaS segment is expected to be fastest growing? Collaboration and productivity tools, AI-powered SaaS solution, marketing automation, and data analytics. Is it 1, 2, 3, or 4? Okay, so do put your responses in the group chat. Okay, so the answer is 2, AI-powered SaaS solution. That is expected to be the fastest growing subsegment within the SaaS market. Okay, so with that, we'll take a look at Avepoint's company performance. Given the industry backdrop that we have shared, given our understanding of the SaaS business model, we can then take a look at the company performance and understand some of the key metrics. Okay, so first and foremost, as a research analyst, what I always like to do is to understand where the company's revenue is coming from. Okay, so for example, if I'm looking at, say, a REIT that is listed in Singapore, I want to know which are the geographical areas that it operates in, whether it's a 100% Singapore portfolio or whether it's got assets in China, in the US. And likewise, for other businesses, we can look at the breakdown by geography as well. Okay, so in terms of the breakdown of the revenue, we see here that 44% of revenue from North America, 35% from Europe and the Middle East, and 21% from APAC. Okay, so this is understandable given that the North American market is the largest one, especially for a lot of the corporate SaaS applications. Okay, the next part that I would effectively look at would be the industries that the software actually serve, and that is the chart on the left in terms of the key industry segments that its customers actually reside in. Okay, so I mentioned earlier that Avepoint is a B2B SaaS company, which means that it doesn't sell directly to consumers like you and me, but instead it sells to corporates. And what we can see here in terms of some of the key industry segments that actually use the Avepoint software, that would include some of the industries such as professional and admin services, finance and insurance, federal and government. And I think understandably so, because some of these industries are also the ones with the greatest emphasis on data security as well as data governance. So if you think about it, definitely for financial services, that is very important. You do not want the customer data to be compromised in any way. because that would then hamper the trust that customers would have in the financial institution. And likewise for government applications, you do not want some of your confidential data, you do not want your SingPass data to be compromised. So once again, the government application towards data security and governance is going to be higher compared to some other industries. Okay, so that would be some of the key takeaways that I have looking at the breakdown of Avepoint's revenue in 2024. Okay, so in the breakdown, I actually have this term that is annual recurring revenue. If you're not familiar with the term annual recurring revenue, we might be familiar with revenue, which is the sales that the company is able to make. But for SaaS company, we look at annual recurring revenue because that measures the amount of predictable revenue the SaaS company actually earns from the subscriptions. Okay. So that is what is very important for SaaS company because we are willing to pay a higher valuation for companies that has got more recurring revenue. Okay, so this is what we see for the annual recurring revenue for Avepoint. In 2020, it was $122 million US. That has grown to 327 million by 2024. So we have seen this consistent growth in the annual recurring revenue over the last 4 years. And effectively for the growth rate of 23.6% in 2024, that would put it ahead of some of the industry peers that also likewise operate a SaaS service, but it is not the highest within the entire industry because we have seen some of the other companies, including those in the cybersecurity space, such as Cloudflare, actually being able to achieve an even higher ARR growth of 29% in 2024. Okay, so what is driving this increase in the annual recurring revenue? First and foremost, we see that Avepoint has been able to grow its customer base. So in 2020, it has about 8,483 corporate customers. And by 2024, that has grown to 25,000 total customers. Apart from the increase in terms of the total customers, we also see an increase in terms of its large customer base. So how do we define this large customer base? So we can look at the number of customers that generate revenue of 100,000 and the number of customers that generate revenue of $1 million. So if you're to look at the number of customers that generated more than 100,000 of annual recurring revenue, that increased from 256 in 2020 to 666 in 2024. More importantly, for the number of customers that generated more than 1 million of annual recurring revenue, that has also grown as well from 6 in 2020 to 26 in 2024. Okay, so because the customer base is growing, we have more large customers. That is helping to drive the increase in terms of the annual recurring revenue of Avepoint. Okay, how about going forward? Okay, I mentioned that they have hit 327 million of ARR in 2024. Based on what the company has shared as its target, they are targeting 1 billion of annual recurring revenue by 2029, and that would reflect the growth in the industry that I shared earlier. Okay, so what I'll keep track very closely going forward would be the ability of the company to be able to be on track towards meeting this 1 billion ARR target in 2029. So if it's able to grow its revenue rapidly in 2025, even accelerating from the growth that we saw last year, and bring it forward such a way that it is closer to hitting this 1 billion target, then I think that is going to be seen by investors as a positive. But on the other hand, if we see that the ARR actually declines and is further away from hitting this 1 billion target, then investors may become concerned around whether it is able to hit the 1 billion target in 2029. Okay, so I shared earlier the annual recurring revenue. The other key metric that we want to look at for a SaaS company is their ability to retain clients. So in this case, the ability to retain customers is very important because you spend money to acquire these customers. You want to have the visibility on the revenue. And if you're able to keep most of your customers, they are not canceling on your services, then the ability to earn the recurring revenue from these customers is going to be even more significant. Okay, so what we have seen here is that for 2024, the gross retention rate of all customers for Avepoint is at 89%. And across the different customer subsegments, we see that it's had the highest retention rate for customers that generate 250,000 of ARR. And it is actually slightly lower for small and medium-sized business customers. Okay, you might be wondering why is that so? So this is a trend that we typically see for most of the corporate SaaS companies. Because for some of the small and medium businesses, they might be more cost conscious. Some of these SMB customers might also face financial difficulties as opposed to larger companies that are more established. So we typically see that small and medium enterprises have a lower gross retention rate compared to the larger customers. Okay, so the next important metric is really the recurring revenue mix, which is an extension of the ARR concept. Because what we want to see is of the total revenue of the company, how much actually comes through from recurring revenue. Okay, so the higher the amount of recurring revenue, the larger and more consistent the predictable revenue stream is, and the more confidence that we have as investors that they'll be able to continue making this revenue. Okay, so we see here some benchmarks for different listed SaaS companies. On average, the recurring revenue mix is at about 80%, and for some companies, they can reach as high as 90%. Okay, so what we have seen here is that if I were to look at the total SaaS revenue as a percentage of total revenue, for Avepoint, it has increased from 34% in 2020 to 70% in 2024. Okay, so as a percentage of the total revenue, it is moving more customers towards the SaaS model, less one-time revenue that is actually going to be more unpredictable. Okay, and then if I were to look at the recurring revenue as a percentage of total revenue, that has increased to 87% in 2024 from 75% in 2020. So effectively, where some of this recurring revenue might actually be coming from, effectively through some of the SaaS related services and less on some of the one-time sales related revenue. Okay, so we have shared about the revenue of Avepoint, and as investors, we want to be focusing on the profitability of different companies. So that is where the concept of margins actually become important, because apart from wanting the company to grow its revenue, we want the company to do this in a way that is also sustainable, and that is being reflected in the margins that it is able to make. Okay, so what we see here is that Avepoint revenue has been growing, like what I shared earlier. If you were to look at the gross margin trend, the gross margin dipped in 2022, 2023 to about 73%, but improved in 2024 to 76%. Okay, and if you were to look at the operating margin, that swung negative in 2022. Improved to positive operating margin in 2023 and became even more positive in 2024. Okay, you might be asking what is driving this improvement in operating margin. I think that is tied to what I shared earlier. If it's able to increase the clients that it is retaining, then what this means is that it doesn't have to spend so much cost to acquire these customers. And if they are able to earn a good recurring revenue from these acquired customers, then that would actually allow the company to make a higher profit. Okay, so what you don't want the company to do is to spend a lot of money to acquire customer, and then 1 month later, the customer actually cancel on the subscription. But if they spend very little money to acquire this customer, and then from then on, the customer just keeps renewing the subscription, that will then allow their operating margin to improve over time as they are able to earn more and more of this recurring revenue. Okay, so that is being reflected in the improvement in operating margin that we see for Avepoint. I compared the ARR growth with other companies earlier. So what I've done here is to compare the gross margin of Avepoint versus some of the peers. So 75% gross margin in 2024, below some of the other SaaS companies. I mentioned Cloudflare earlier, which might be one of the cybersecurity companies that many of you are more familiar with, but not the lowest in terms of this entire peer group. Okay. So there are two ways to see that. One is that they are not able to make as high a gross margin in 2024. But that also means that there is scope for the company to improve on its gross margins if it is able to improve on its operations. Okay, so next I come to the concept that's called the Rule of 40. And this is a very important metric for assessing SaaS companies. So if there's one key takeaway that we can all have from tonight's webinar, and if you can share with your friends what you learned from the 1 hour that you spent on a Tuesday evening listening to this webinar, it is that you actually learned of this term called the Rule of 40. Okay, so what does this Rule of 40 actually mean? Effectively, I shared earlier the revenue growth and also shared the profit margin. And these two are actually important because we want to look at companies that have a good revenue growth and also being able to make a good profit margin. Okay, why does it actually matter if I've got very strong revenue growth but I'm making very low margins? Then that is not ideal because that is going to impact my cash flow, my sustainability of operations at some point in time. On the other hand, if I have a very strong profit margin, but then I don't have any revenue growth, that might potentially be an issue as well because investors are going to be asking, where is my earnings growth going to be coming from? Okay, so ideally we want to have companies with good growth as well as good margins. And if the sum of their revenue growth and their profit margin is exceeding 40%, then that typically exceeds the industry benchmark. Okay, so why is this metric important? Because when companies are able to exceed 40%, that implies strong growth potential. We can compare different companies operating within this sector together by using this benchmark. And I think more importantly, allows us to look at which companies are able to strike a good balance between growth as well as profitability. Okay, it's very difficult to have both growth as well as profitability, but if a company is able to do both, then I think it is a company that makes it more worthwhile for us to explore further as investors. Okay, so we look at the Rule of 40 benchmark for Avepoint. In 2022, it was at 27%. 2023, it was at 31%. And in 2024, it was at 38%. Okay, so if you remember earlier, I mentioned that it has been able to achieve ARR growth. The margins were weaker in 2022, improved in 2023, improved further in 2024. And putting that together, it is closer and closer towards achieving this Rule of 40, even though it is actually not there as yet based on the 2024 earnings that it has reported. Okay, so that's definitely something that I'll keep a lookout for as to whether it is getting closer towards achieving the Rule of 40 or it is actually not able to achieve the Rule of 40, whether is it because the growth in the ARR is slowing down or that we are not able to see a further improvement in its margins. Okay, so I've introduced the rule of 40 concept, and then I think the last point is really how do we evaluate the valuation of SaaS company. Okay, so for many of us investors, we know that there are different valuation metrics. The most commonly used one is the price to earnings ratio, which measures how much you are actually paying for every dollar of the company's earnings. Okay. Next, we can also look at price to sales, which is how much you are paying for every dollar that the company generates in sales. We can look at price to book, which is effectively how much you are paying for every dollar of the net asset of the company. Or we can, rather than using the market cap of the company, we can also look at the enterprise value, which is including also the debt that this company has on top of the market valuation of the company. Okay, so I've captured a screenshot of Yahoo Finance here. When I went to Yahoo Finance and look at Avepoint, it actually showed me this screen with quite a number of different valuation measures. So my question to you is, if you are at Yahoo Finance and looking at this screen, which valuation measure would you actually use to measure the valuation of Avepoint? Okay, so put into the chat if you are like me, trying to research further on Avepoint, going to Yahoo Finance and coming across the statistics, would you look at PE, price to sales, or other valuation metric? Okay, so 1, price to earnings, 2, price to book, 3, enterprise value to sales multiple. Okay, so this is a bit more difficult, but I just wanted to end off today's session by also looking at how we can value SaaS company using one real-life example of the different valuation metrics that come through on Yahoo Finance. Okay, so the answer that for me, I'll look at enterprise value to sales. The answer is because if I'm looking at, say, price to earnings multiple, some of these high growth tech companies might not have earnings as yet. So then it becomes harder to measure the price to earnings multiple. Okay, if it's to look at price to book multiple, because some of these companies may not have much tangible assets, they may not have a manufacturing plant, they may not have an entire fleet of airplanes like what SIA has, but a lot of what they sell is actually just the software that doesn't have a lot of tangible value tied to it. So it may be harder to look at it from a price to book multiple perspective. So as a result, some investors may prefer to use enterprise value to sales because that allows us to compare the market value, the debt that it has versus the sales that the company is generating. Okay, so effectively from here, we see that the enterprise value to sales multiple of Avepoint is 7.3 times based on the latest data that I put from Yahoo Finance. Okay, I think what we can then do is understand which companies tend to command a higher EV to revenue multiple. And going back to the rule of 40 principle that I shared earlier, what we see here is that companies which are able to achieve the rule of 40 typically have a higher EV to revenue valuation compared to companies that have a lower rule of 40. Okay, and that's understandable because investors might be willing to pay more for companies that have very fast revenue growth as well as a high profit margin. Okay, so some of the valuation multiples that we see here, I mentioned earlier the Avepoint EV to revenue at about 7.5 times. Okay, so I would say that is lower compared to some of the other companies that we see in this list, like Cloudflare, but at the same time, not the lowest within this entire list, because we do see some of the companies trading at EV to revenue multiple that are at 3 times or 4 times or 5 times. Okay, so we can then also compare that to the rule of 40 multiple. And what we see here once again is that companies which have achieved the rule of 40, such as Cloudflare, typically tend to have higher valuation multiples compared to companies that have not been able to do so. Okay, if you want the complete list of valuation multiples, we have previously published a report on Avepoint. You can go to the Beansprout website, and also our admin will be sharing the link to this report where you can actually get the entire list that I'm sharing here. Okay, so last but not least, all investments come with risk, and I will share more about the risk that comes through from investing in Avepoint. Okay, so this is not just peculiar to Avepoint, but most software as a service companies in general, in that they are sensitive to economic cycles. So because they are high growth businesses, so they are also then sensitive to some of the economic conditions. So for example, if there's going to be a recession, the companies might actually cut back on their software spending, and that might actually lead to them not having as high ARR growth compared to expectations. Okay, and next, cybersecurity and data protection. So I mentioned earlier that those are increasingly in focus by consumers, by corporates. So while that is driving the growth in Avepoint, but at the same time, they also need to be mindful of any data breaches and leakages, because if that's going to happen, that will potentially compromise their track record within the industry and how some of the clients actually use their software to be able to protect the data as well as the security of the data themselves. Okay, so some other broader risk that comes through from SaaS companies, the ability to find product market fit, whether they are able to grow the earnings in a sustainable manner, and more importantly, whether they are able to retain their customers to enhance the profitability. Okay, so just a final quiz. Which are some of the risks for SaaS company? 1, data breaches. 2, economic cycles. And 3, financial sustainability. Or 4, all of the above. Okay, the answer is all of the above. Those are risks that we need to consider for SaaS companies, including for Avepoint. I've shared a bit about Avepoint in terms of how the confidence platform is now helping 25,000 customers to be able to secure and optimize their data, particularly on the Microsoft collaboration environment. Okay, we look at the industry trends, how that's expected to grow by about 17 per year through 2028. And with that, driving the expected growth in annual recurring revenue for Avepoint. Apart from revenue growth, the other key metric that we looked at is the operating margin, which has also improved over the past 2 years for Avepoint. And with that, they are closer to achieving the Rule of 40 at 38% in 2024. They are targeting to grow the ARR to 1 billion in 2029 from 327 million in 2024. And that is something that the company has publicly stated. We'll keep a lookout for whether it's able to achieve this target and how the various upcoming earnings releases would put it on track towards reaching this target. Last but not least, we talked about the risk, and I think that was a very thoughtful question around how exposed it is to the Microsoft ecosystem. So indeed, that is a very significant risk for Avepoint. On top of that, we also have macroeconomic risk, competition, among some of the other risks that we discussed. Okay, so hopefully with today's short sharing, we have been able to get a better understanding of what the company does. It may not be something that we deal with on a day-to-day basis compared to, say, DBS or, say, Sheng Siong. But with the sharing today, hopefully you're able to get a better understanding of their software, the industry that it operates in, as well as how the company actually makes money before we decide whether to invest in this company or not. Okay, I mentioned earlier that we have various resources on Singapore stocks, bonds, REITs, and ETFs on the platform. So if you are interested to understand more about SaaS, how to value SaaS companies, do visit our website, growbeansprout.com, to be able to get the insights. And you can also get further updates by following us on our various social media channels. Okay, so with that, thanks so much for joining our webinar tonight. I hope you found the session helpful and have been able to get a better understanding of this company that we have recently seen being listed on the SGX. Okay, I hope you have a very pleasant evening and I hope to see you at our next webinar. Thank you so much.